Welcome to the channel. My name is Kris Anderson, and I have been a mortgage lender for over 21 years. If you're here, chances are you're interested in learning more about FHA loans and how they can help you achieve homeownership. FHA loans are a great option for many first-time buyers and even those who have purchased homes before. In this video, we're going to explore everything you need to know about FHA loans in 2025, from the basic requirements to the ins and outs of mortgage insurance and debt-to-income ratios. By the end of this video, you'll understand how to get an FHA loan and why it could be the right choice for you. Before we dive into the specifics, I want to remind you to hit that thumbs up if you find any value in this video. It helps the channel out a lot. And if you want to stay updated on everything related to FHA and first-time homebuyer topics, do me a favor and subscribe to the channel. I post new content frequently to help guide you through the home buying process. Now, let's get started. Let's start by talking about who can benefit from an FHA loan. An FHA loan is one of the most popular government-backed loan programs in the US, and it's not just for first-time homebuyers. That's a myth. While it's true that many first-time buyers opt for an FHA loan because of the low down payment and more lenient credit requirements, FHA loans are available to anyone who meets the program's requirements. If you're purchasing a primary residence and need to put as little as 3.5% down, then an FHA loan could be perfect for you, regardless of whether it's your first home or your third. FHA loans are designed to help people who may have trouble qualifying for conventional loans due to lower credit scores, smaller down payments, or higher debt-to-income ratios. This flexibility is what makes FHA loans such an attractive option for a wide variety of home buyers. And if you're worried about credit or income requirements, don't be. I'm going to walk you through the specifics of these guidelines so you can understand exactly what's required. There are so many misconceptions about FHA loans, so let's take a minute to debunk some of the most common myths. First, the idea that FHA loans are only for first-time homebuyers is one of the biggest myths. As I mentioned earlier, FHA loans are open to anyone who meets the criteria. Whether you're buying your first home, upgrading to a larger one, or refinancing your existing property, you can still use an FHA loan. Second, many people think FHA loans are only for those with poor credit. While FHA loans are known for being more lenient with credit scores, you can still qualify with a good credit score. The minimum required credit score for an FHA loan is typically 580, but some lenders may even approve applicants with a score as low as 500 if they can make a larger down payment of 10%. Finally, there's this myth that FHA loans are too expensive because of mortgage insurance. Yes, FHA loans come with two types of mortgage insurance, an upfront premium and a monthly premium. However, even with this extra cost, FHA loans often offer lower interest rates than conventional loans, which can make them more affordable in the long run. I'll break this down in more detail shortly. One of the reasons FHA loans are so appealing is because they're more flexible in terms of credit score and down payment requirements compared to conventional loans. Let's take a deeper dive into these key elements. Credit scores. FHA's minimum credit score. As I mentioned, FHA loans typically require a minimum credit score of 580 for a 3.5% down payment. If your score is lower than that, you can still qualify, but you'll need to put down at least 10%. What if my credit score is higher than 580? Even if you have a credit score over 580, you can still take advantage of the FHA loan program, and you may benefit from more favorable interest rates. Your credit score may play a role in your final loan terms, but you'll still have access to FHA's flexible features. Down payment. Low down payment advantage. The biggest draw for most buyers is the low down payment requirement. For a 3.5% down payment on a home priced at $200,000, you'd only need $7,000. This is a significant benefit, especially compared to conventional loans, which often require 5%, 10%, or even 20% down. Are there other funding sources for the down payment? Yes. One of the great things about FHA loans is that they allow for down payment assistance programs, including gifts from family members or grants from local or state programs. Some sellers may even agree to cover a portion of your closing costs. So don't think you have to come up with the entire down payment on your own. Now let's get into one of the key aspects of FHA loans that often causes confusion: mortgage insurance. FHA loans come with two types of mortgage insurance: upfront mortgage insurance premium and monthly mortgage insurance premium. Upfront mortgage insurance premium. This is a one-time premium paid at the closing of your loan. In 2025, the upfront mortgage insurance premium is set at 1.75% of your loan amount. For example, if you're taking out a loan for $200,000, Your upfront mortgage insurance premium will be $3,500. This amount is often rolled into your loan balance, meaning you'll pay it off over the life of the loan rather than out of pocket at closing. Monthly mortgage insurance premium. This is a monthly charge added to your mortgage payment. The amount of your MIP will depend on the size of your loan, the length of your loan term, and your loan-to-value (LTV) ratio. For example, if your LTV is above 90%, your monthly mortgage insurance will likely be higher than someone with a lower LTV. The monthly mortgage insurance premium can be a significant cost, but it's important to remember that FHA loans generally have lower interest rates than conventional loans, which can offset the additional cost of mortgage insurance. Also, if you're able to refinance later on and switch to a conventional loan, you can eliminate the MIP once you've reached 20% equity. One question I get asked a lot is, how can I get rid of my mortgage insurance on an FHA loan? The answer is simple: refinance. Once you've built enough equity in your home, usually about 20%, you can refinance your FHA loan into a conventional loan to eliminate the mortgage insurance. It's worth noting that you'll need to have a good credit score and meet other requirements to refinance, but it's an option that many homeowners use to save money down the road. However, refinancing isn't always the best option if rates are higher than your current FHA rate or if you haven't built enough equity in your home. So it's something you'll want to plan carefully and discuss with your lender. Your debt-to-income DTI ratio is a crucial factor in qualifying for an FHA loan. It's the percentage of your monthly income that goes toward paying off debts. FHA has two types of DTI ratios to consider: the front end and the back end. Front end DTI. This ratio measures the portion of your income that will go toward housing costs, such as your mortgage payment, property taxes, and insurance. FHA typically allows up to a 47% front end DTI ratio. Back end DTI. This ratio includes all of your monthly debt payments, including housing costs and things like car loans, student loans, and credit card payments. FHA allows up to a 57% back-end DTI ratio. Let's take a quick example. If you make $4,000 a month, your front-end ratio could be up to $1,880, 47% of your income. And your back-end ratio could be as high as $2,280, 57% of your income. That's a pretty generous limit compared to conventional loans where the DTI limits are often stricter. Getting pre-approved for a mortgage is one of the most important steps in the home buying process. When you're pre-approved, you'll know exactly how much you can afford to borrow, and you'll be in a much stronger position when making an offer on a home. The pre-approval process involves submitting documents like pay stubs, bank statements, tax returns, proof of assets, and credit report. Your lender will use this information to determine your loan eligibility and give you a pre-approval letter, which you can use to show sellers that you're serious about buying. Now, if you're watching this and you don't know where to start, you can actually work with me and my team directly. If you want a stress-free process, please reach out to me today. We would love to walk you through every step of the home buying journey and help you make the most of your FHA loan options. Go to texasmortgagelender.info today. There you have it, a comprehensive breakdown of FHA loans, how they work, and why they might be the right choice for you. Whether you're a first-time home buyer or a seasoned buyer looking to refinance, the flexibility and affordability of FHA loans make them a fantastic option for many. Don't forget, hit the thumbs up if this video helped you, and make sure to subscribe so you never miss an update on everything FHA related. Thanks for watching.